Bloomberg Audio Studios. Podcasts, radio, news. You're listening to Bloomberg Businessweek with Carol Massar and Tim Stenovec on Bloomberg Radio.
I got to talk China. I mean, okay, so the president did announce a 90-day pause on higher reciprocal tariffs that hit dozens of trade partners after midnight, though raised duties on China to 125%. Shehzad Qazi is COO and a managing director for China Beige International. The company provides data that tracks the Chinese economy. He joins us here in the Bloomberg Interactive Brokers studio. This is a very big trading partner of the United States that was not affected positively by today's announcement. Still, we saw stocks linked to China move higher. We saw Apple move higher today. How does the fight between the U.S. and China end?
Yeah, that's a big question. I don't think it does. This is a new era for sure. I don't think there's a very high chance of there being what I call a deal for the ages of centuries between these two, where they decide they're going to make structural changes to their economy and they're going to, get rid of, market barriers for American companies, et cetera, start buying a lot of commodities. Perhaps they'll buy a lot of commodities. Perhaps they'll buy a lot of advanced chips if you sell it to them. But that big deal concept, it doesn't happen. Instead, maybe what you get are a series of mini deals between the two countries, and then you're still on a course where these are two hostile powers.
Decoupling, is it happening?
Decoupling is absolutely happening. It's happening in complicated ways. Obviously, one thing is you see, bilateral trade, for example, between the two, on paper looks like it has come down a bit, but you have the problem of transshipment, which is essentially China has completely rerouted its trade with the U.S. through Southeast Asian countries, which, by the way, means that you could go from the 100 and whatever percent to, 1,000 and some percent, and it may not make a difference because at this point you're relying on transshipment to get the goods to the U.S. anyway, so that number at some point is less impactful.
How vulnerable is the Chinese economy right now in this, what right now is a trade war between the United States and China?
Big picture, the economy is obviously slowing down. They didn't have a very hot March. That said, 1 month of weak data, it may bother markets. It does not bother the Communist Party or Xi. I think they have the capacity to weather the storm for now. Let's keep in mind that counter to what we were hearing all of last fall, there was no big bang stimulus, bazooka, this and that. People like to hear that term. It didn't happen. They have the firepower in reserve because they knew they're going to need it this year and next year probably.
Is he also President Xi, willing to deal with a little bit of pain in order to kind of have a spine here, and which he's obviously already shown in terms of the retaliatory tariff, like willing to kind of go the distance, even if it does mean some pain at home?
President Xi is not afraid of pain, as we've seen with what he's done to his own economy.
Right.
And China cannot capitulate as far as he's concerned personally, and as far as I think the Communist Party is concerned. They will not come to Beijing with a begging bowl. They're not going to pick up the phone and beg for a deal.
The move today from Apple has been a little puzzling to me, and I've been talking to everybody about it. I've been asking everybody about it. I know you don't cover individual companies, but Apple is a very important company in China.
Right.
It had its best day since 1998 today. Shares rallied by 15.3%. Is the optimism that Apple could see an exemption? Is the optimism that Apple could move production outside of China and more into India, at least for US bound smartphones? You're nodding a little bit. Is it all of the above? Like, why is there optimism for a company that is so enmeshed in China when it comes to its supply chain?
My gut feeling is that markets still don't really take this US-China tariff war seriously, that there is this continuing hope. Let's keep in mind, they did not think Trump was going to do all of this. The market was ultimately caught by surprise when the big tariff announcement in the Rose Garden happened. And I think a big chunk of people ultimately think that there is a big US-China deal that's going to happen, like a phase one or a phase two, of course, and things are going to go away. I think part of it is that sentiment out there. It could be just overplaying the thing that the manufacturing can be moved out. The India stuff is very short term. And, again, you're going to recreate, iPhone City somewhere else. That's going to take a very, very long time. So I don't truly buy the optimism as much as I can understand it.
Do you not buy the optimism as a whole for the market not understanding the ramifications of this trade war? Like, you still say that the market doesn't fully grasp the tension with China.
Yeah,
that's not priced in.
Well, of course, there was a big positive reaction because global tariffs are essentially pared back to a large degree, so I get it. But the next few days, the next few weeks, if the tension with China remains at this level or intensifies, I don't think the market should be getting much relief in that case.
Shehzad, let me throw out some numbers. It was in a story by our Enda Curran, who follows the global economy and knows China really well. Two economies, U.S. and China, with a combined GDP of $46 trillion locked in a game of chicken. His words, at stake, almost $700 billion in two-way annual goods trade. China's estimated $1.4 trillion of portfolio investments in the United States. And less obvious, but no less significant, variables such as people-to-people links forged over decades at businesses and universities and public opinion that's souring on both sides. I've said this a lot on air. I started my career and it was all about global companies wanting to get into the Chinese market. Yep. President Clinton, the WTO, the fight to get China in there. It was all about tapping the domestic economy in China. That's what everybody wanted to do. They've set up shop, they made deals. Is all of that at risk? Is that all of that likely to go away? And should we think that U.S.-China relationship, it's just kind of, this is the beginning of the end? Or maybe it's already started a few years ago.
I don't think this all goes away, but one point to consider is, have U.S. companies, have these CEOs really contemplated what their own future in China looks like? Because it seems like that they never understood that China would actually do the technology transfers, do the JVs, et cetera, and ultimately have its local companies prop up that would be competing with their American counterparts and would be heavily subsidized and would eventually go on to grab a bigger and bigger share of the domestic market. Mm-hmm. Foreign companies in general are struggling against local companies in various sectors in China today. So what does that future look like? I would suggest the CEOs contemplate that. But no, I don't think this means everything's coming to an end and no American companies in China.
All right, Shehzad Qazi, of course, is Chief Operating Officer and Managing Director for China Beige Book International